Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast that covers those personal finance questions that are important to you and your family. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. Today, we begin the first episode of a series on disability planning by looking at the disability tax credit. This tax credit is known as the gateway to many federal disability programs. Without it, you're typically not eligible to be entered into the program. Without having the disability tax credit, programs like RDSPs are inaccessible, so this tax credit is extremely valuable. One of the major complaints of the disability tax credit is having one's disability approved under the program, a topic that we're going to be looking more into at the tail end of the episode. The tax credit itself is deemed as a non-refundable tax credit, meaning that it can eliminate your current year's income taxes, but any amount beyond that is not beneficial to you. The disability tax credit can also be claimed by a supporting spouse or parent, as well as supporting child, grandchild, grandparent, sibling, aunt, uncle, niece, or nephew. The amount of the basic tax credit is $8,416 in 2019, and an additional supplement of $4,909 for minors under 18. The actual tax savings is a percentage of this. The federal percentage is 15%, and there is an additional percentage based on your province. For example, the percentage in Ontario is 5.05%, or 20.05% combined. This would equate to a tax credit of $2,671.66 for a child. When someone qualifies for a disability tax credit, it can also be retroactively applied to past tax years up to 10 years, meaning that this can lead to a big tax return in some cases. To qualify for the disability tax credit, some hoops must be jumped through. To qualify, the applicant must be defined as having a disability that is either physical or mental. It also must be prolonged and severe. Individuals that go under life-sustaining therapy can also qualify in some cases. To further qualify the process, the basic activities of daily life must be affected for at least 1 year. These activities include aspects like walking, speaking, eating, mental functions, and more. The impairment of these ADLs are that they must affect one 90% of the time, even with therapy. Blindness and life-sustaining therapies are also separate categories that can help one be approved for the tax credit. While the tax credit can be helpful, there are also a few major issues with it. The first being that there needs to be a taxable income for the credit to be used. Situations where a recipient is low income and has no one to share the benefit from will not fully take advantage of the program, as they may not have to owe any taxes in the first place. The interpretation of qualifying disabilities is also strongly criticized as lacking clarity, subject to doctor bias, and failing to include some disabilities. Individuals that suffer from mental impairment have reported that it's much more complicated to be approved in comparison to individuals with other disabilities. So overall, the disability tax credit can be very valuable to those that can utilize it and be approved for it. Having the tax credit opens the doors for pretty much any other federal program for those in the disabled community. Thank you so much for joining our podcast today. If you're enjoying the show, you can support us by rating or sharing the show with anyone that you think may benefit. You could also connect with me at info@ffcoach.ca or find me on Twitter at @f_fcoach. Take care and talk to you soon.